Hello, and welcome back to our podcast series, Collections Conversations, sponsored by our friends at C&R Software. In today's episode, I'm stepping outside my comfort zone a bit. My analysis of the financial services ecosystem, including the analysis you've heard in this podcast series to date, is very US-centric. Now, this isn't bad per se. There's a lot to learn from what's happening here. But it is a bit myopic. Financial services is a global industry, and the way that it's practiced in different countries varies wildly based on differences in market structure, regulation, and culture. Nowhere are those differences more pronounced than in collections, which, as we've been discussing in this series, is often far more of an art than it is a science. The nuances of how and when you intervene with a customer who is beginning to get off track differ country to country, as do the laws and customs that govern such outreach. We can learn a lot by widening our view of this topic beyond our own borders. And that's exactly what Chris Smith, VP of Product at C&R Software, helped me do in this episode. Chris and I talked through the differences in how lenders in different countries, the UK, Australia, Brazil, and many others, approach collections, how they measure success, and where they are investing their resources in order to improve. I've known Chris for a while, but this was our first time recording a podcast together, and it was a treat. So, without further ado, here is episode 7 in our series, Collections Conversations. Okay, Chris, thanks so much for coming on.
Thanks for having me, Alex. Appreciate it. I'm here with my cup of tea. I'm ready for a good chat.
Excellent. Yeah, you are ready. We have, I feel like, had a few conversations over the years that are going to touch on some of the ideas that are going to be expressed here. The difference, of course, is we've never done it as a podcast. So I am delighted to have you on in an official capacity. The frame that I had for this discussion is to kind of broaden our perspective on collections. Obviously, I am based here in the US. I spend almost all my time focused on the US, to my detriment, I think, to be honest with you, because there's a lot that I could be learning, and a lot I think that folks listening to this podcast be learning by sort of turning our eyes outside the US and trying to understand what happens around the rest of the globe. So let me start with this question. Before we get into the details too much, from your perspective, why is it helpful to pay attention to what goes on in collections around the rest of the world?
Yeah, so almost slightly opposite to you. Luckily enough, I've had throughout my career the chance to operate across different markets. I'm now based in the US, but my voice probably indicates that wasn't always the case.
Sure.
I've had the chance to see what's going on elsewhere. And it always does fascinate me how certain things are, collections is collections everywhere we are, everywhere in the world. But certain things are very different in terms of how progressed in certain markets versus others. I think the other interesting piece is, I remember back in the days, he's going back 15 or 20 years, was thinking of being in the UK then, thinking of launching a product into the US. And it was like, oh, the US has probably got all this figured out and knows all this stuff. But again, at that point, luckily someone smarter than me came in and was like, hang on, the US has just the same problems that exist around the rest of the world. So in summary, the same problems and challenges that we face here in the US are faced everywhere else, but some of the nuances are a little bit different everywhere. So some places are actually way, way further advanced than others in different aspects.
Yeah, I mean, I remember when we all worked at the same company, one of my favorite things was to hear from folks in different regions. And collections was actually always the most interesting because, to your point, and this has been a theme across the whole series that we've been doing with this podcast, collections doesn't always get all of the attention. It doesn't always get all of the budget. But maybe because of that, it tends to get some of the more sort of creative and innovative thinking. And when you multiply that by the number of different countries and markets that obviously lenders operate in, you start to see some really interesting examples. And so I guess I'm curious, what are some specific examples that come to mind of different, I guess, functions or different sort of jobs to be done within collections that look a little different maybe than what we have in the US? And why do you think some of those other geographies might be a little further ahead in those cases?
Use the word innovation. I think what's interesting at times is innovation ends up being powered by almost problems and challenges.
Totally.
And like to some extent, we sit here in the US and like on certain items, things are easy, if that makes sense in some regard. So again, like real basics of we have a functioning mail system, like we sort of we know where everyone lives, like generally speaking, and people aren't like that transient, relatively speaking. You suddenly go to, other places like Africa, no mail system, no landlines, these things. So suddenly like that drives innovation. As soon as digital capabilities and communication came along, it like took off there immediately, straight away. And they're like were way further down the line. Whereas again, here in the US, it's probably not as urgent or panicked back at that point in time, 15, 20 years ago. And then probably secondarily, obviously, the regulatory aspect then comes in and has some of these differing impacts as well. Obviously, with like Reg F in collections, that sort of limited some of the digital collections activity for a period of time. So yeah, I think a variety of different factors impacts this. It's probably across the credit life cycle though as well, isn't it? Like this isn't a collections unique thing. I assume, like again, across all parts of the banking life cycle, there'll be different levels of advancement in different areas in different regions.
Oh yeah, no, I think you're absolutely right. I mean, other markets I find interesting. I've actually spent a decent amount of time learning about Brazil, and Brazil is fascinating because, like to your point about different parts of the life cycle or different parts of financial services, they have Pix in Brazil, which is their sort of instant payment system, and it's remarkable, and it's sort of the envy of central bankers in almost every other part of the world, and yet it's a very specific combination of the market structure, the nature of sort of incumbent providers and financial services, the regulatory environment. To your point, like regulators I find in other markets tend to be much more sort of pro-innovation because innovation can address like structural issues in that country, whereas in more sort of mature markets, regulation is more designed to stop bad things than to enable good things. It's like kind of a different perspective. And then even in Brazil, like I was blown away recently to learn that Brazil has had buy now, pay later as kind of the dominant way of financing purchases for decades, like going back to the 50s. And so there's like kind of a cultural element to different like things as well. So it is really interesting. I wanted to ask you specifically about regulation, since you mentioned it. I spent some time with John McNamara, who formerly of the CFPB, and he was talking a little bit about how regulation impacts the collections industry. And I was curious, specifically when it comes to collections, what's been your observation about like the differences between the US and other markets when it comes to collections regulation?
Well, I think obviously you've got some markets where it's much less stringent, as you talked about, and focused on innovation. But even in some of the like the more mature or the most mature credit markets, whether it's like the UK or like the Canadas, Australias, what's interesting to me is the difference in approach of how so it's like less rules based and more policy guidelines, guidance based. So again, we go back to like Reg F comes out here and it's like, this is the exact rule, 7 calls in 7 days. And this is what you can and can't do. And then I go across to the UK, their most recent, one of the most recent big regulatory changes. They introduced this thing called consumer duty. And again, in essence, it's sort of saying you need to make sure that the customer has the right outcome in any interaction with them. And you need to use data and you need to prove it. And almost like to some extent, that's it. Like it doesn't go into all these like very factual, specific, this is exactly what you need to do. But weirdly, it almost has almost the inverse effect of what you'd expect. Because suddenly then all of the banks in those markets are like, okay, well, how do I put the customer at the heart of what I do? How do I innovate and do things around this to actually, live this vision? Almost come back, it's like a business strategy of, I can either, you can either set an organization by telling them these are the 12 things you need to do, and they'll, well, hopefully achieve the 12 things. But if, again, you sort of set that like vision and concept and idea, then, often you end up going further and achieving more. So yeah, it's like the concept of the pressure that regulates part is the same, but always how they go about it. It's interesting how sort of different that is.
Yeah, it really is. And I mean, you're now based in the US. Do you think the US could adopt a principles-based approach like that and an outcomes-focused standard? Is that something that would be feasible? Do we even want that in the US? What's your take on that?
I don't I don't think so. Maybe more than probably the question to go before that slightly is almost, why is it like this? And like,
Yeah, sure.
why is the US very like factual? And again, you'll know better than me, so we could get your view. I assume it's almost based on like the sort of litigious nature maybe of the US, and the fact of people even go back and take legal action against the regulators, which I haven't
Totally.
really seen that much elsewhere. So suddenly, because of that, the regulators are probably there like, well, I need to say exactly where the line is, so that if someone crosses it, I can do something about it, and almost scared about any grey. So my opinion is probably won't ever happen, or we won't move to that. But again, I don't know if you got an idea of why there is that difference.
Yeah, it's funny. I mean, I'll go back to Brazil as an example. I was talking to a central banker in Brazil and marveling at Pix and being like, "Oh my gosh, it's amazing! Like you have instant payments, everyone uses it. It's overtaken Visa and Mastercard in terms of payments volume. This is incredible. How did you do this?" And he was like, "Oh, it was really easy. We're the regulator. We regulate the banks, and so we just told them to do it, and they did it." And I was like, "Oh, yeah, that's simple and sounds direct." And he was kind of confused. He was like, "So you don't do that in the U.S.?" And I'm like, "No, no. In the U.S., we don't do that. And in fact, as it relates to like the Federal Reserve and like payments infrastructure, the Fed is like legally not allowed to force banks to adopt it." And he thought that was totally strange. But to your point, I think we do have a very different sort of legal structure, regulatory structure, and just sort of precedent and like custom, to your point about like kind of having a more litigious society generally, right? I mean, I think it is very unusual in other parts of the world, even mature markets, for market participants to sue the government or regulators. And in the US, like I'll use open banking as the example. When the open banking rule came out under the Biden administration, the Bank Policy Institute sued. They filed the lawsuit like 30 minutes after the rule was published, right? I mean, like the lawsuit was like ready to go. They didn't even read the rule before they sued over it. And, to your point, that also gets into like how laws are written and like the foundations of these regulations, because in the case of open banking, that regulation is based on a very vague statute and the Dodd-Frank Act that is not prescriptive. It is more principles based, and it doesn't say you must do this. This must be how you do it. This is how many times someone is allowed to try to connect their account. Like it's not prescriptive or rule based in any way. And it has been the subject of endless fights and lawsuits and seems like likely to be bound up in that forever. I remember when I was talking to John in the previous episode about Reg F, and he was saying that like in Reg F, they actually use the word like telegram, like that's in the regulation, And so it's like, it's this very interesting difference, I think, between the US and other countries where we just are never going to have that same thing. So we'll probably have to just limp along with more of the ultra prescriptive rule based system that we have.
I do think it's. Oh, sorry, I was just say, I do think it is
No,
slightly
please.
going back to your point of, is it a good thing? It is like slightly sad's bad, but
Yeah.
it is almost to the detriment. Like again, I feel as though again this giving people the freedom to actually figure out, the banks the freedom to figure out what is the right answer to, again, make sure you're doing you're treating the customers right at every step of the journey. If it does create that right environment of the banks taking it up and like actually living and breathing that, it ends up for a better solution for the customer. And actually then even for the banks as well, because then they can, tailor and tweak to what does make sense for them, rather than, again, sometimes these very strict, like rigid rules and laws that then make it harder to live by.
I totally agree. I mean, I think that when you have those really strict rules, I mean, one thing that's a challenge with them, and we run into this a lot, is they end up becoming outdated just because technology changes, right? And that's the Telegram example, where it's like, when we were writing, the law that sort of resulted in Reg F, we didn't have, so we weren't all carrying around personal collection resolution devices in our pockets that could be used asynchronously. Like, I mean, we're going to talk a little bit later about AI, but like the idea of an AI agent that could act on my behalf and interact with my creditors so that I don't even have to, like, Reg F does not contemplate any of that stuff. And so I think that it is very challenging. I was feeling for John and for the CFPB when he was sort of describing the work they had to go through to try to update it. I will also say I think the other problem with principle-based regulation in the US is the US, love it or hate it, and I think it's both a good and a bad thing, is just this ruthlessly hyper-competitive market. And so what tends to happen in that type of environment is if there's a principles-based regulation where there's a loophole for bad behavior that you can get away with because it's not explicitly spelled out. My parents used to have this problem with my younger brother, right? Like if they didn't tell him explicitly, you can't do this, you can't do this, you can't do this, he would do the one thing they didn't mention. And they're like, well, we didn't think to mention, don't do that. But that was just how his brain sort of worked as a teenager.
Just to interject, can we get your parents on just to confirm that anecdote is about your younger brother and not you? Is this one of those situations?
No, I wish that I was that, like.
Do you play by the principles?
I am much more of a principles-based person. I'm more of a UK bank who's like, no, I can see what you want and we're aligned in our goals and like I'm not going to give you any trouble. My brother is much more of a US like fintech company where he's like, well, you didn't say this, and so I'm going to find my way around this thing. And my parents would confirm, I think, the difference there. Though good question. But I think it goes to this idea that like it's just really hard. And every market just has different incentives, which leads me to another question, which is like, why does this matter? And maybe you can use the UK as an example, or maybe there's a different market that is a better example. But like, if you have a principles-based approach, or if you take a slightly different angle on how to regulate collections, we're going to focus more on like customer treatment and fair treatment and customer outcomes. Like, how does that actually show up in terms of results? What's been your observation on that?
I think a lot of people in the US in the collections industry would be somewhat shocked if they turned up and talked through with some of the all of the UK banks in the way that they just even talk about things. So, like for example, there's not many teams that brand themselves as collections anymore. They're all like financial assistance, financial support. They're like the fundamental name of a part of the bank, the organization. And then everything just like stems down and flows from there in terms of what they're fundamentally trying to do and trying to achieve. So yeah, it ends up being a big mindset shift. I think my like favorite anecdote on this point is, so like the NPS scores that obviously you get dragged into filling in for all different companies. So again, a bank in the UK completed an NPS score process for all touch points across the bank. Whether it's again after they've just originated the customer, any interaction. Here's a quiz question: which part of the organization drove the highest NPS score?
Oh my gosh! Well, if you tell me it's, I'm sorry, I don't remember. Collections, yeah.
It's unbelievable. But again, you're like, how on earth is that? But it sort of makes sense when you're like, again,
it makes total sense.
Am I gonna, if I go on my bank's website and it's like, okay, the website's great, they made it easy for me to move money around. Am I like, oh yeah, these guys are amazing? They like, I'm gonna give them my 9 out of 10 and recommend them to a friend. It's like that's sort of just table stakes. I don't really care. But again, if like the point when I'm actually like in difficulty, facing challenges, how I'm handled at that point in time, if I'm again handled correctly, able to get in contact easily, supported through that journey, then all of a sudden, like that's where then that sort of net promoter score jumps up. So yeah, it still does have this like positive impact on sort of the end customer.
I'm glad you mentioned that. And two things on that I just want to emphasize, and this came up earlier in the series actually, but the idea that like what we call this thing actually matters is so interesting to me because like in the US, we use the most absurd term ever, which is pre-collections, right? Which is like, I'm going to reach out to you before you have a problem. But just think about the way we're describing that. Collections, pre-collections, like I'm going to reach out to you because you're a screw up and you're probably going to have a problem and I want to stop you from having a problem. Like just the mindset and the language we use to describe it tells you everything you need to know. Whereas like financial assistance or financial health or however you want to describe it just comes at it from a completely different lens. And, your point about the sort of customer impression versus the lender impression, I actually wrote about this a while ago. And the crux of the idea was that, there's an inversion between the stakes that a customer has at different stages in the life cycle versus the stakes to the organization, right? So, and this is kind of the US perspective on it, but if you look at the lending life cycle from the lender's perspective, the highest stakes is acquisition, origination. Like, can we get the customer? Can we approve the customer? Do we think we made a good risk decision? And if we did, that's the high stakes moment where it provides all the value to us. That's what we care about. So we're up here. This is where we put all of our money and all of our effort. And I think banks and lenders are very lazy in their thinking sometimes when they assume, okay, because that's the most important part of the life cycle to us, that should be the most important part of the life cycle to our customers as well. And of course, that's a flawed assumption, right? Because if you think about it from the customer's perspective, like acquisition and origination starts down here. It is the lowest stakes thing to the customer. I haven't committed to any one provider. I'm shopping between a bunch of different ones. Quite frankly, you all offer roughly the same product. They all look roughly the same. I'm maybe just shopping based on price. And then I select one of you. And it's not until I'm approved and I get the loan that the stakes in that relationship from the customer's perspective start to go up. And in fact, the most high stakes moments in a relationship that a customer has with a lender is when something goes wrong, when there's a problem, when there's a bump in the road. So even though it might seem unintuitive to a US-based lender to hear, what drove the biggest result in NPS scores? Are you telling me it wasn't the really cool digital origination thing that we built over here? It was someone talking to someone else on a phone in collections? Like, that doesn't make any sense to me. If you think about it from the customer's perspective, that's the moment when they need you to show up. It makes all the sense in the world, but it requires that mindset shift that you're talking about.
I think the other piece on this is then that positive and that type of engagement at the back end, the impact it has, both on the retention, the customer experience side, but then even back to like the sort of collections performance as well. Like that, if you again can actually identify, work through and solve that customer or help the customer at that point, of their when they're in the most difficulty, then again they're way more likely to stay with you as your customer for life. And again, they're way more likely to sort of resolve that financial challenge that they face with you, at that point in time. My background is in like collections analytics. That's how I came into this murky world. Sure. So again, I like preach data, I preach like scoring, I preach analytics and all this stuff. But then every time I get into this sort of conversation, it's like, well, you sort of play it out and you've got, a customer who's there with, just lost their job, struggling to pay their utility bills, then what difference does it make you can have any fancy data you want to understand your customer, any fancy risk scoring to know whether they're high or low risk. You can have any fancy, like right time to call models or what's the best channel I should call that customer. Even AI pieces, you can contact them through, it doesn't matter. Like, it doesn't matter. What can you actually do to help that customer at that point in time? Yeah, and if you can figure that out and provide some support and assistance, then that's what actually fundamentally makes the difference to these customers that are sort of challenged there.
Yeah, I mean, I think that's absolutely right. And just to add one final point on that, we were talking before about the fact that the US market is so hyper competitive that it doesn't allow for sort of principles-based regulation because there's always people trying to exploit every single edge. You know what a great edge is? Having high NPS scores and a really high retention rate with customers who think you care about them. Like, that is a great thing to have in a highly competitive market where acquisition is like increasingly tough. And so like when I preach invest in collections, invest in like digital collections, invest in collections analytics, it's not because like, oh, it's a nice thing to do for your customers. It's because like, this is like the edge you can have in this market if you treat this as a source of competitive differentiation, not just like an operational area to be cut down to the minimum amount possible. And so it does require a different mindset shift. You mentioned that Go ahead. I
was going to say, I stole that. I remember hearing you speak about this and read something of you a while ago about this, the fact of the, again, increasing competitiveness now in the US market because of open banking and things like that. And as you say, that's in this increased market, what value does it provide? A huge value. Again, if you can drive up those sort of customer experience benefits. And again, it sort of all loops back all together back to like the regulatory aspect as well. I mean, that's fundamentally what the regulators are looking for.
It does. Well, and it's like just because just because you can be combative with regulators in the US and you have a team that can sue your regulator if you feel like you have to do that, doesn't mean that's the best thing to do. Like it's better to have a business that is a good business that's also aligned with kind of where regulators want you and the industry to go. And so if you can go in that direction and make a bunch of money, like feels like a win-win to me.
I think there's other ones as well. There's other examples going back to everyone, like every time new regulation comes out, it's like concern and panic and pressure that it puts on the organization. But again, we said at the start about what drives innovation: pressure, challenges, difficulties, problems. So again, there's all sorts of examples that come out of, again, these regulatory changes that like actually drive innovation and drive helpful things. Yeah, there's a good example actually, a UK one, where it came out and suddenly there was a request for organizations. It was called like a hello goodbye letter. So when you pass off the account into a debt collection agency, you actually have like a more of a formal handoff. And at the start, everyone's like, oh my, this is a nightmare. Like, oh, it's extra overhead, extra cost. This is going to kill us. This is going to ruin our businesses. All of a sudden, everyone introduced that. And it's like, oh, who'd have thought it? Everything, suddenly the collections rates actually improve and increase off the back of it. Because the customer previously was like, who on earth is this reaching out to me? This, random debt collection agency I've never heard of. But all of a sudden now they know they've got the letter from the bank that tells them this is what's the next step. This is exactly the person you're about to go to. So that, again, you've got this smooth handoff. So again, it's sort of interesting. Again, the regulation, the challenge, the pressure ends up can drive innovation, like in other aspects.
No, I mean, it's 100% right. And it, I probably fall back on this analogy too much, but I have 3 young kids at home. And so parenting is always on my mind. And it does remind me a little bit of that, where it's like, why are you asking me to do this? Like, I get that from my 8-year-old all the time, like, and then turns out a lot of the times the thing that I ask him to do, even though it seems like, to use bank language, a compliance burden that I'm placing on him for no good reason, there actually is a reason and a logic behind it, and some good thing comes out of the thing that he sort of felt forced to do. And I do find banks' sort of like instinctive reaction to any new regulatory requirement is like, oh, they're asking me to clean my room again. Oh, I can't believe this. And the reality is, well, there is probably too much compliance busy work in parts of the business, and I get that. And parents can be annoying. Yeah. That some of it like totally can help. And actually there is good reasons. And sometimes there is value that comes out of operating within a tighter set of constraints, to your point, and like operating under pressure, which brings me to another thing I wanted to ask you about. We had an episode earlier in this series that was really kind of focused on AI. You come from a collections analytics world, so I'm sure you've had a lot of discussions with folks and a lot of thoughts on this, but it seems to me that like Gen AI is going to also introduce some new both opportunities, but also some constraints and some interesting challenges in collections. Where are you sort of seeing the usage of it being applied, and like where do you think we are in kind of the broader adoption curve right now?
In terms of the broader adoption curve, I feel as though we're similar to, I think you hear this across all sorts of industries, not just banking and the credit world we operate in. But again, there's the adoption's picking up, but almost the questions coming out of like, where's the value off the back of this? How's this actually going to, deliver these transformational benefits that I'm being promised? So I feel as though that seems to be generally consistent across the world. What is different, again, probably driven by everything we've talked about today, whether it's regulators or other factors, is then the sort of level of uptake and how fast different things are moving in different places. My favorite one, literally this week, I think it was like Tuesday, I was talking to a US bank, and then Wednesday I was talking to a South African bank, just coincidentally. AI, obviously hot topic in both.
Sure, yeah.
Talk to the US bank, and it's very much about, again, introducing Gen AI and these capabilities. And it's very much about, okay, let's start off by using these tools to help our humans, help the collectors today, augmenting them, making them better. We'll go very carefully, softly, steady, and like gently work up to then almost making that customer facing and with a more autonomous sort of collections activity. So going the next day, and like to then the South African organization was sort of talking the same, expecting that flow. No interest really at all about the again about like helping they're just all about the end goal. So like straight away in on like how do we go now? How do we go like we're seeing the massive benefits that unleashing these like autonomous like collections tools and capabilities can have on their business, and are sort of just way more willing to like jump in faster and quicker. So again, sort of a real life example, like within 2 days, it almost made it again sort of really stand out the topic of this conversation today.
Oh yeah, no, absolutely. I mean, it kind of goes back to what we were saying about the culture of like risk management and kind of conservatism in different industries and in different markets. Like in the U.S., for good and valid reasons, but it is interesting. Like lenders are like, okay, this is cool, but how do I not get in trouble for this? How do I mitigate the risks of this? And you see this. I'm sure you have this conversation a lot with banks, fintech companies, lenders, where like in the US, they're saying, like they look at a technology like this and they almost see all the ways it could go wrong first, because we've just beaten that into people over so many years. That's just how we think. Whereas it's interesting that in other markets, and to your point, even relatively mature markets, they just have a different orientation towards this question. And so I'll be curious, I mean, maybe as a follow-up question to this, how do you think that plays out over the next like 5 years or so? Because one thing I have noticed with AI is it has a really compounding sort of speed effect in terms of however you use it or don't use it, the results will be fast, right? Like the adoption of it is fast. It can move fast. The models are always improving in terms of, so like, it's just this very rapidly iterating technology. And I kind of wonder if we'll see like a bigger divergence between different institutions that have different attitudes about it, or different markets, as it relates to like how aggressive versus conservative they are with the deployment of that technology.
It is that the whole world is like accelerating and shrinking. So I think what you'd say is true, but almost that's true for all of these technologies over time. And it's almost been longer. You're going to go back to the digital, the sort of digital piece of even just like sending out digital communications. Like the lag between the most progressive and the slowest market was like a big, wide 10, 15 years. But now I think what you're saying is true and accurate. And there will be then a lag. But I don't think it will be quite as long. Again, especially as like the clear benefits and use cases and examples come out, even whether it's from different markets or pioneers in certain, in the US in certain sectors that make that leap, then again, everyone else will I think follow on quick. I think what's almost helpful. It's almost helpful. Like it's not a bad thing. This whole cautiousness, like to some extent, it's a good thing. Like,
oh sure,
don't want to jump into and like do things that end up causing problems, harming customers, and that type of thing. So, again, the cautiousness, being the slight laggard behind, again, whether it's some other markets, is almost a good thing, because then some of those learnings can be taken on board and and sort of harnessed and utilized. Because again, it's almost like the technology is there, readily available. The way of rolling this out, I feel everyone's still sort of figuring this out. I think you talked through with Naeem of how everyone's viewing that rolling out AI is just like a tool. You just turn it on and off it goes. I think your conversation was very much about humanizing it, and it's very much like rolling it out with a person and people. So again, you've got to think about the people, the process element. So again, rolling out these things is very much like the operationalizing aspect, in the same way that we roll out any other new tools or processes across our operation. But again, the good thing is, as others start to go through that, those learnings can then be pulled back and taken on board.
No, I think that's right. I mean, we have those processes and those workflows for good reasons, and they can be applied to sort of new technologies, I think, pretty effectively. Another thing we've talked about earlier in this podcast, I did an episode with Dave Wasik at Second Order Solutions, and he was kind of talking about this idea of like collections on the edge, meaning like sort of collections as it relates to sort of the economic challenges that are facing different borrowers and the lenders are sort of working around, and what sort of opportunities there are to kind of get ahead of some of that. Because I think there's a perception on the part of a lot of folks who work in anything that touches risk, where it's like, I don't know what's going to happen, right? And there's this just sort of like broad, deep well of uncertainty where it's like not bad. And actually, most lenders you talk to, their portfolios are, performing pretty well and are kind of holding up well. But there's also this sense that like at any moment, we could have challenges. When you talk to lenders about like how to sort of get ahead of that, how to prepare for that, what are some of the things that are kind of top of mind?
I think the one big learning and piece I picked up recently from, again, across the globe and in various other markets, almost linked to the pre-delinquency piece I think you mentioned earlier on in this discussion, is almost that part of the journey I think is like fascinating me at the moment. There's like the quote from, whether it's the NHS or general healthcare organizations about cure versus prevent, cure being way cheaper than prevention being way cheaper than
cure.
A cure. Again, like you either go into hospital with a heart attack and it costs an awful lot of money to resolve, or you put out a scheme to get everyone in the country living healthier and eating better and walking better, and all of a sudden you're like driving down the overall costs. I think exactly the same principle applies here in collections. It's probably underutilized or under-focused upon in the US. Again, we go, you said earlier about that, we go pre-collections and like just honing in and starting collections activity before it needs to, or it's technically delinquent. But actually, again, more of shifting that mindset again to like the prevention terminology. What are the things that we can do to prevent? Whether it's, again, when you identify these high risk customers, how can you actually help them? How can you guide them to resources to sort of support them? How can you provide broader education? Even just things through like the onboarding journey that can be done, of just to make sure everything's smooth, seamless. You don't have these, what's the word? Not technology, but like process issues that crop up for a customer that causes them to flow into delinquency. The sort of on the first payment. Those types of things. I think other organizations around the globe seem to be trying to think more of and dive deep into. Whereas here in the US, it seems to be a bit of a gray area of like, who owns that? Because it sort of floats around between the servicing team versus a collections team, and hence I think it's a gap of ownership and hence focus.
Yeah, I mean, I think you're right. The organizational structure, I think, drives a lot of this, where it's like it's funny. We always fight about who owns the customer at like the sort of obvious points, but then in the like less obvious points where it would actually be beneficial for someone to say like, I want the customer in that moment, everyone is kind of weirdly hands off, right? So it's like, well, like we originated them, that's when I own the customer. We're not cross-selling them another product, so I'm not interested. But then the collections team is like, well, but they haven't actually gone delinquent yet, so they're not ours. And like ironically, that's the place where getting engaged with the customer could be really useful. I would give the analogy, since I'm here in Montana and we actually do have snow on the ground, despite the fact that it's April, which is alarming. So I haven't taken the snow tires off the car yet, which my wife is thankful for. But like when you're driving on snow or ice, it makes it very clear that like it's the first little like jerk of the steering wheel, because then the car's going this way and then I have to overcorrect and go this way, and then I'm really overcorrecting and then I go this way, and now I'm spinning and I have to overcorrect the other way, and pretty soon I end up in the ditch. And it's like, why did that happen? And it happened because of that first initial little just jerk of the steering wheel for some small thing. And I think you can take a lesson from that with collections and pre-collections and servicing, where it's like, to your point about those little operational things, like, hey, did we set the customer up with the right auto pay mechanism so that like it's unlikely that there's going to be a missed payment? Because just one missed payment accidentally could just be no big deal. They'll just fix it and it's not a huge deal. Or it could be that first jerk of the steering wheel that sort of sets you off on like a not less than ideal path. And I think that we don't do nearly enough work to try to ensure that even little bumps don't sort of throw people off. And that's the type of like preventative thinking, to your point, that we don't specialize here on in the US.
Yeah, I agree. Yeah, things like salary day alignment. Again, we sort of focus on that when we get into collections. When you're setting up a payment plan of like, okay, when should I take out these funds? When do you get paid? But yeah, how often is that? Is that definitely always in place for customers? Even further upstream, just for their just for their standard regular payments. So again, there's all sorts of examples when you start to dive in or dig in and think about this.
I completely agree with that. I think that's exactly right. So let me ask you one final question. You've been very generous with your time. Then I'll let you go. Again, if we were to sort of look out a little further into the future, let's say 5 years from now, I'm curious what your perspective is on what the global collections industry looks like. Which regions are going to be leading, which are going to be lagging, and like what variables are going to, do you think, be most important in sort of determining who's ahead and who's behind, as we look into the future?
I'd say globally, my slightly controversial statement is, does collections even exist? And that's not in the sense of, not necessarily totally in the sense of, I've heard some people go on this whole like, well, AI solves everything, it goes away. That's not the case. But almost leaning more into the piece we talked about earlier about this shift to financial well-being, and thinking about this as more of a customer service challenge and problem. So again, more of that mindset shift in certain markets is going to continue to evolve. Again, customer service and collections getting closer together. Focus on financial well-being, paired with obviously the AI capabilities and more self-service and those things going on for certain groups of customers. Is I think my controversial statement when we talk about global collections in certain markets. Going back then maybe to our first point around regulation in the US, will that happen here? Will that same mindset shift? I maybe has the guess no, maybe. But yeah, I don't. That's the big unknown, and we shall see. I don't know. You got thoughts on that controversial statement and the applicability to the US?
I certainly do. I mean, if I could like manifest one thing from our conversation to happen, I would love it if we could see that happen in the US. I mean, I have thought for a long time that a more proactive, sort of servicing oriented approach is really, really needed. If I could just like magically wipe away the word collections, even if a lot of the functions still exist, because you need every part of the life cycle. But if I could just wipe away the word collections and kind of rewire people's brains to think differently about it, I think that would be a huge deal. And to your point, in the future, I think one thing that's nice about the world becoming smaller and we're kind of becoming more global by default is the distance between these different models or these different ideas starts to shrink, right? And so pretty soon, I think you will see more US lenders, US banks sort of adapting to some of the best practices in these other markets and going, oh, like that's interesting that they do that. I wonder if we could do something similar here. And so I think you're already starting to see some evidence of that. And while I don't think that AI will be the sort of silver bullet to any of these problems we've been talking about, that's just not the way it works. I do think it will be an accelerant towards some of these things as well. And so I am looking forward to that future. Maybe we can come back on 5 years from now and I can just be like, Chris, you called it. You were right. This has happened, and you can take a victory lap.
Well, we shall see. I won't take too much credit because I feel I'm again just using this is the global view of like using seeing what's happening elsewhere, just sort of applying that back. Because again, I feel like we're all around the world are sort of following each other in one way, shape, or form, and different parts of the globe get ahead on one area, and then others catch up and move ahead in others. So. Yeah, it's not exactly, I won't call it a massive prediction. It's more just seeing where certain markets are going and applying it back.
No. You are predicting something just using your own magic powers. That's what we're going to end with.
I like that.
I'm just kidding. Chris, I appreciate you coming on. Great as always to talk to you. Thanks for taking the time.
Look forward to it. Look forward to seeing you again. You take care.
Likewise.